Welcome back to Investing Talk podcast. Today, we're tackling a question quite a few of you have actually asked. Is Hut 8 Corp a good time to buy right now? We've pulled together a whole stack of recent data, analyst insights, market trends, everything we could find to help you understand what's going on with this, pretty significant player in the crypto infrastructure world. Before we really dive in, just a quick reminder, if you find these chats valuable, please take a second to subscribe, maybe like this episode, and definitely leave a comment below. It really does help us bring more of this stuff to you. And hey, if there's a company you want us to look into, just pop it in the comments. We're always looking for suggestions. And, if you feel like it, you can always consider buying us a coffee to support the work we do here. Okay, let's get into Hut 8. We've got a ton of info here. Our goal today is really to boil it down to what's most important so you walk away feeling, genuinely clued in about this company. Let's maybe start with the basics. What exactly does Hut 8 do, and how's it been performing financially, especially with all the crypto market buzz lately?
Yeah, the Hut 8 is interesting because they're not just a Bitcoin miner, right? They've actually spread out. They're into power generation, digital infrastructure, even compute services. It gives them a bit more strategic resilience, I'd say, compared to miners who are purely focused on mining Bitcoin. Multiple revenue streams, basically, which can be helpful in such a, volatile sector.
That diversification does sound smart, especially in a market that can swing so wildly. And the numbers, they certainly tell a story of rapid expansion, don't they? We're seeing 2024 revenue hitting $162.39 million. That's a, 69% jump from $96 million in 2023. That's massive. What's behind that kind of growth?
Well, it's mostly two things. Higher Bitcoin prices, obviously, and also they've been seriously expanding their mining capacity. But the number that really jumps out is the net income. In 2024, it shot up to $331.88 million. That's over 1,400%, an incredible increase. It suggests they've got strong operating leverage. They're making more profit as they scale up. But, and this is a big but, you absolutely have to remember, this sector is inherently volatile. These huge swings in earnings. Well, they cut both ways. Their latest EPS, trailing 12 months, is $1.48.
Right. So incredible growth, potentially huge profits, but always shadowed by that crypto volatility. Okay, so what about their overall financial health? You mentioned leverage. How does their balance sheet look? How solid are they? And, how do they stack up against competitors?
Okay, so the market cap is currently around $2.82 billion. They've got about 105.5 million shares out there. Now, here's something important for you to note. While that huge net income implies they probably had positive operating cash flow recently, specific verifiable balance sheet details like from recent 10K or 10Q filings weren't readily available in the sources we looked at for this specific latest period. So what does that mean? It means we have a bit less visibility into their current debt, their cash situation, their overall financial structure than we'd ideally like. And given how fast crypto cycles can flip, that lack of direct transparency is definitely something to keep in mind. Rapid reversals are always possible, and if they are leveraged, that needs close watching.
That's a really crucial point. Transparency is key, especially in volatile sectors. So investors need to kind of factor that uncertainty in. Okay, moving beyond the core financials, Hut 8 has been making some pretty aggressive moves operationally to boost its competitive edge, hasn't it?
Oh, absolutely. They practically doubled their deployed hash rate. It went from 4.6 exahashes per second in February 2025 up to 9.3 EHs by March 2025. That's a 102% jump in just 1 month.
Wow, doubling in a month.
Yeah, that's incredibly fast scaling. It puts them right up there as one of the fastest growing Bitcoin miners in North America. And on top of that, they've also boosted their fleet efficiency by 31% compared to the year before.
Yeah.
So you've got this powerful combo, super fast expansion plus getting more efficient, which helps support an industry-leading cost structure.
Scale and efficiency, that does sound like a strong combination. But okay, how does all this translate into valuation? What are the metrics telling us? How is the market looking at Hut 8?
Right, valuing a company like this. It's tricky. It's such a dynamic sector, very growth-focused. Traditional metrics, they only give you part of the picture.
Okay, so let's break down some key ratios then. What have we got? Their PE ratio, price to earnings, trailing 12 months, is 18.3. Now, that's actually lower than the average S&P 500 tech PE, which is usually, mid to high 20s?
Yeah, around 24 to 28 typically.
But you mentioned PE can be less reliable for miners because their earnings can be so lumpy, right?
Exactly. Very inconsistent sometimes. Then you look at the price to sales ratio. That's around 20.4x.
Okay, 20.4. That sounds high compared to, say, traditional infrastructure companies.
It is higher, yes. But our sources suggest it's actually within a sort of normal range for the top crypto miners,
Yeah.
especially when Bitcoin's in a bullish cycle like it has been. These kinds of multiples, especially that high PS ratio, they really reflect a lot of investor speculation, betting on that crypto exposure, not just the growth you'd expect from regular infrastructure. If you compare them to other big miners like Marathon or Riot, HUD 8 trades at similar, sometimes even higher, multiples. That signals pretty strong market confidence in their growth story, at least for now.
So the market definitely has high hopes baked in. What about the analysts, the professionals covering the stock? Where do they see things heading?
Analyst price targets seem to be clustering mostly between, say, $26.24 and $29.28. That range, it generally lines up with the kind of upside potential people see in the broader sector. It gives you a tangible benchmark, at least, for what the pros are expecting for the stock price.
Okay, let's switch gears a bit and look at the market pulse right now. What are the technicals telling us? Where does the stock stand today in September 2025?
Yeah, fundamentals are one thing, but how the market is actually trading the stock day to day, it's important too. It gives clues about near-term direction.
All right, so as of today, September 2025, HUD 8 is trading at $26.79. Looking back over the past year, the 52-week range is pretty wide, $8.73 on the low end, up to $31.83. Quite a ride. For the rest of this year, 2025, analysts are kind of projecting a range between roughly $25.78 and $28.83. Then for 2026, the estimate widens out quite a bit, $22.94 up to $36.15. Key levels to watch: support seems to be around $21.26. That's its 50-day moving average. And resistance looks like it's up around $29.28 to maybe $31.95, which lines up with those upper analyst targets and the 52-week high.
And notice that current price, $26.79, is smack bang in the middle of that analyst target range for this year. It kind of suggests the market's found a bit of an equilibrium point, maybe. It also hints that, getting significant upside from here in the short term might need some kind of new catalyst, something fresh to push it higher.
Makes sense. What about other indicators like momentum, volatility? Do they paint a clearer picture of the stock's health right now?
Well, the RSI, the Relative Strength Index, is sitting at 52.5. That's pretty much neutral. Not overbought, not oversold.
Yeah.
Neutral. Volatility is around 9%. Now, that's high compared to the broader market, but honestly, it's pretty typical for crypto mining stocks. It comes with the territory.
Right.
Trend-wise, the price is currently above both its 50-day moving average, which you said was $21.26, and its 200-day, which is lower at $19.31. That pattern is generally seen as bullish, suggesting the upward trend is still intact, for now at least. And sentiment. Looking at the last 30 trading days, about 53% were green days the stock closed higher. That points towards, let's say, moderate bullishness among traders recently.
Okay, so largely bullish trends still holding, but definitely expect that crypto-style volatility. Let's talk about recent news and what's coming up. Events and headlines can really move a stock like HUD 8, right?
Absolutely. How recent news and future potential events shape the whole investment story for HUD 8? That's really crucial to understand.
Well, first off, the overall analyst view is very positive. A strong buy consensus rating. Our sources showed 19 analysts rating it either buy or strong buy. Price targets are all over the place, though, from a low of $18 up to a high of $36. So quite a spread there. Looking back at specific news, back in June 2025, HUD 8 announced the strategic reclassification, expanding their whole infrastructure portfolio. They're aiming for over 2.5 gigawatts across 19 sites eventually. Management was really emphasizing their balance sheet strength then, too. They highlighted holding over 10,000 Bitcoin, worth about $1.2 billion at the time, plus new credit lines worth $330 million. And they launched a big $1 billion equity program, an ATM program, to fund future growth. And importantly, they said about 90% of their existing 1,020 megawatt platform is already contracted out. That shows pretty strong demand for what they offer beyond just mining. Then moving into July, they put out their Q2 results for 2025. Looked pretty healthy. $41.3 million in revenue, net income of $137.5 million, and adjusted EBITDA over $221 million. That really underscored their efficiency and smart digital asset management. Although the stock did wobble a bit right after, didn't it? Down about 3% one day, 6% over 10 days, even though the general trend was still up.
Yeah, short-term volatility is always expected around earnings. Even good ones sometimes.
Right. Then in August, we saw some big institutional investors like Nuveen and Northern Right Capital increasing their positions. That usually signals growing confidence from the big money players. And on August 7th, they reported Q2 earnings per share of negative $0.14, which sounds bad, but it actually beat the consensus estimates. Plus, they showed really strong net margins, over 112%, and good free cash flow. Their moving averages kept climbing too, suggesting that positive momentum was continuing. Okay, so lots of activity, lots of growth. What are the next things? What are the upcoming catalysts that could really move the stock, both near term and maybe longer out?
Yeah, there are definitely things on the horizon, both definite dates and more speculative stuff that could spark more volatility and trading interest. Short term, the big one is probably the Q3 earnings report that's scheduled for November 6, 2025. That's a key date. And of course, any big move in the price of Bitcoin itself will directly hit Hut 8's margins and its stock price. It has a really high beta, 3.45.
3.45. Wow.
Yeah, so if Bitcoin makes a big move, Hut 8 is likely to move even more, percentage-wise, up or down. Looking at the calendar for the next few months, let's see. September 30th, you've got potential ETF rebalancing, which could mean funds buying Hut 8 shares. October 1st, institutions have to file their 13Fs, showing their holdings. October 14th, they're expected to give an update on their Q3 mining fleet and maybe holiday operations outlook. Then, like I said, November 6th is the Q3 earnings release. And November 30th, there could be changes in digital asset ETF compositions, another thing that might influence demand. Longer-term catalysts. Well, just their continued hash rate expansion offers ongoing growth, and there's always the potential for M&A activity. Maybe they acquire someone or get acquired or form new partnerships.
Interesting. What about rumors or more speculative things floating around? Anything juicy there?
There's always chatter in this space. One persistent rumor is about a potential strategic merger or acquisition, maybe with another North American miner or even an energy infrastructure company, to get bigger faster and find synergies. Another one is Hut 8 potentially being added to more of those U.S.-listed spot Bitcoin ETFs. If that happens, it could trigger buying from index funds. There's also speculation they might seriously push into AI or high-performance computing, HPC, as a service, using all that digital infrastructure they're building. And finally, some people think an announcement about a big new power deal, maybe with renewable energy providers, could be coming soon. That would help them scale and maybe lower costs.
Okay, lots of potential upside drivers. But we have to talk about the other side too. We know this sector isn't for the faint of heart. What are the key risks investors really need to have on their radar with Hut 8? Where are the potential pitfalls?
Definitely need to be aware of the risks. Starting with risks specific to Hut 8 itself. Well, number one is that high exposure to Bitcoin's price swings and the whole blockchain economy. Big crypto downturns can wreck their forecasts. Also, spending heavily on expanding their mining fleet, that rapid capex, could really strain their cash flow if Bitcoin prices take a dive unexpectedly. And even though they're growing fast, competition in the mining space is fierce, and it's not going away. And circling back to that earlier point, the lack of easily accessible direct 10K financial data for the very latest period, that does reduce conviction for some investors. It just adds a layer of uncertainty. Then you have the broader market and sector risks. That super high beta, 3.45, means Bitcoin's volatility directly hammers all miners like Hut 8. Regulatory changes are a constant potential threat. New rules in North America about energy use or crypto itself could dramatically change the economics for miners. Also, miners who rely heavily on fossil fuels might face rising costs or more scrutiny as the world keeps pushing toward renewable energy. That's a longer-term pressure.
And finally, don't forget the next Bitcoin halving events, probably coming in early 2028. That automatically cuts the revenue per mine coin in half, which is a fundamental challenge every miner has to plan for.
Okay, we've definitely covered a lot today. The growth story, the efficiency gains, the potential catalysts, but also the significant volatility, the competitive pressures, the regulatory clouds, and that transparency issue. Let's try and wrap this up. How would you summarize the overall investment thesis for Hut 8 Corp right now?
Well, I think it really comes down to balancing that significant upside potential, which is clearly there, against the very real inherent risks of playing in the crypto sandbox. It's definitely not a simple picture.
Our sources actually put an overall rating on Hut 8 of 7.5 out of 10. So the positives are pretty clear. Strong revenue and earnings growth recently, that impressive industry-leading hash rate expansion, generally positive analyst views, and yeah, they seem well-placed if Bitcoin continues its upward trend. But the risks are equally clear. That high sector volatility is unavoidable. There might be a thin margin of safety if Bitcoin corrects hard. Regulatory goalposts could move. And again, that lack of direct recent 10K transparency is a point of caution. Plus, the current price being right near those consensus targets might suggest limited short-term upside unless Bitcoin really takes off again.
So given all that, the obvious question is, what kind of investor might Hut 8 be suitable for? And maybe over what time frame?
The sources we looked at seem to lean towards it being better suited for short-term trading right now. Why? Because of the strong momentum it's shown, those clear near-term catalysts like earnings coming up, and its sensitivity to Bitcoin swings, which traders love. But, and this is crucial, this is strictly for investors with a high tolerance for risk. You have to be okay with potentially big swings.
Yeah, and for a longer-term investment. Well, shareholders could be exposed to some pretty binary risks, either from regulation or fundamental shifts in the crypto market, especially until we get more consistent, clear financial reporting directly from their SEC filings. It just underscores that need for ongoing homework, ongoing due diligence. If you're planning to hold this one for the long haul, you really need to understand the risk you're taking on.
So, back to the original question. Is Hut 8 Core a good time to buy now? Well, as always, the answer really depends on your personal risk tolerance, your investment goals, your time frame. But hopefully, this discussion has given you a much clearer view of both the potential rewards and the significant challenges Hut 8 faces. It's definitely a company showing strong momentum and exciting growth, but it operates in a notoriously unpredictable sector.
And maybe a final thought for you to chew on. As this whole digital infrastructure space keeps evolving, how might companies like Hut 8 need to strategically pivot, or maybe expand their services beyond just crypto mining, maybe deeper into AI or other high compute areas to try and smooth out some of that inherent market volatility? That could be key to their long-term success and stability.
Absolutely. And just a reminder, all the data points we discussed today were verified as of September 3, 2025. And remember, this is all for research and educational purposes. It's definitely not investment advice. Thanks for tuning in to Investing Talk Podcast. We'll look forward to digging into your next question soon.